Welcome to Stockwatch with me, Simon Brown, and joining me to unpack your stock-related questions today, David Shapiro, Sasfin Securities, Schalk, Louw, PSG, Old Oak. Be sure to send your questions through via email, stockwatch@bdtv.co.za, SMS 41392, or on Twitter at BusinessDayTV, #Stockwatch. Gents, thanks for joining us. Schalk, let's start with you. FOMC tonight, MPC tomorrow. Are we seeing cuts, holds, or we're not going to see increases? Who's cutting, who's holding?
Good afternoon, good evening, actually. Simon, it's going to be an interesting one. So let's just go on consensus currently. We should not be seeing any cuts from the Fed side today. I think if we look at the CME tool currently, they're forecasting, I think, a 98% probability of remaining unchanged. We're looking at it going now to about 60-odd% for a cut in September. So not a foregone conclusion yet that we're going to see a cut in September either. I think we're going to be more looking towards the South African side, the SARB tomorrow. That's going to be an interesting one. Because, when you've got a scenario, and we saw the inflation numbers coming out again, 3%, it's nine months in a row now where it's actually remained below let's call it 3.2%, way at the bottom of the bands. So from a, let's call it the economic point of view, they've got more than enough capability to cut the rates further. And, one could argue, 25 basis points, it's neither here nor there. Maybe they should be following suit some of the larger counterparts, speaking about the US, not cutting to try and make sure that the inflation is under control. Well, I know we're going to chat about a few companies, and I'm most probably sure we're going to chat about the Boxer number yesterday. But the one thing that stood out for me was the food inflation. Yeah. Food inflation declining by 0.6%. That's an interesting one, showing us there's definitely no inflation problem in South Africa. We saw the IMF came out this morning, basically decreasing the forecast for most countries, economic countries for this year. South Africa remained unchanged, and one can take that as a win, but 1% forecasted for 2025, man, that's not a win. I mean, South Africa, at the current, let's call it PGM prices, the demand for PGMs, the demand for gold, the demand for copper, the demand for commodities that South Africa is strong in, we should be growing anything between 3 and 5%. So I would say the SARB should send a positive message, cut the interest rate by 25 basis points, and just show that they're still committed to keep inflation under control, yet committed to try and kickstart this South African economy of ours.
David, we should get 0.5% tomorrow, maybe a full percent tomorrow. But are we even going to get the quarter?
We will. Oh, are you talking about the SARB? No, they definitely will cut. No. You've got 3% inflation. What's the repo rate? 7 still. I don't know. I keep losing touch. I mean, there's a massive gap. The rand is strong. We haven't seen any impact of tariff increases in the global economy yet. So there's nothing really to dissuade them from cutting rates. And, Simon, Schalk mentions it. We're growing 1%. We need some love here. In fact, I think the whole global economy needs something. We need another stimulus. We talk AI all the time. Okay, it's enough of that. We need something else to get people, economic activity up. So I'm also hoping that the message gets through to Powell as well. I know he's been battered by Trump, and for that reason he's going to remain stubborn. Although I think he'll face some opposition from some other governments. But it's time to start cutting rates. 3 years of increased rates post the cut. When did we start? End of 21. It's time. Yeah, we're getting tired of high rates. We want some love. Yeah.
Okay.
I want to jump in here. Sorry. Yeah. I want to jump in here because remember we're sitting here in 2 days' time. It's going to be August. I mean, this is now the final stretch of 2025. We went into 2025 with most economists forecasting 4 cuts. For the US from a Fed point of view. You were sitting in August, and we're not 100% sure we're going to see the first one in September. So, yeah, I agree with you, David. I mean, we should definitely be seeing the rate being cut now, and quickly as well.
Look, I raise your 4. We were supposed to get 6 cuts last year in the US, and that didn't happen either. The prediction markets in the US are a bit weak. David, Schalk mentioned August, 1st of August, 30% tariffs. Question came through. Which sectors would be worst hit if the 30% tariff happens? Respect to our Minister Parks Tower. I mean, I'm not sure we're going to avoid that, but that bullet, where's the pain?
Well, I know that Mercedes are not sending any motor cars there, and it would probably, iron ore seems to be one area. But we don't supply America with iron ore.
No.
So I'm not quite sure. And all the other metals, because they're strategic, are not going to attract any duty. But fruit, maybe those kind of things, manufactured products. I'm not quite sure what we send to the United States and whether they really want it from us, so that we produce something that they can't do themselves. So I'm sure there are industries, but I think they're industries that we don't really see, probably in the agricultural side. Yeah. I don't know. I can't get full information on this, but there's a lot of panic about it, whatever it is.
There is. I mean, Schalk, some of it's citrus, so that's about 60 million US, which is a lot, but not. Autos, about 1.5 billion. Are you sort of looking at your portfolio and worried about some of the holdings if tariffs arrive on Friday?
It all adds up, Simon. I mean, we just started off the show talking about the IMF forecasting South African economy to be growing 1%. We're so finely tuned that all of these will add up. Yes, the major export market for our automotives is the European Union, the UK, and also the US. So this, as David alluded to, I mean, our automotives are going to struggle. You mentioned the agriculture, you mentioned the citrus. Never forget the grapes. I mean, the grapes for South Africa. That's our crown jewel, man. Because if you hurt our grapes, you're going to hurt our wine. And if you're going to hurt our wine, you're going to really hurt a lot of people watching the show tonight. So I think this is definitely, I would say, a bit of a worry. I did feel yesterday a little bit more relieved when I saw the government coming forth saying that they are committed. They're not going to retaliate on these tariffs. They mentioned a few things that they will be accommodative. So that's also always the first step. So hopefully now the US will look at this and say, well, okay, we're not going to look at a 30%. Hopefully we can go closer to those 10-15% that we've seen. But I think how do I say, the 1,000-mile walk begin with the first step. We've taken the first step. Now let's see.
Okay, we'll see what happens. And Friday, it's only 2 sleeps away. Schalk, let's stay with you. Glencore production update. Perhaps the biggest story is cutting costs by $1 billion across businesses by end of 2026. Glencore I often think is like the forgotten diversified on our market. Your thoughts on the update? Your thoughts on Glencore?
They mentioned that. I mean, you started off with the cost cutting, and usually when a company sort of say, well, we struggled with the copper, and remember, this is a great environment. We want to see, when the copper price flies, when PGM prices flies, when gold prices fly, you want to see these mining houses, specifically these mines, really being able to produce. And they mentioned that they struggled with their production side, but they did mention the but. Let's call it the cost-cutting exercises that they've done should make up for it, and they should see a better, let's call it second half of the year. Also, they talked of a few marketing initiatives that they've done. 1 billion by 2026 in a cost-cutting. That's great. I want to more see how they're going to be reaching these let's call it production targets, because as mentioned, the commodity prices are flying. And that's where you want to see them actually producing.
Yeah, they absolutely are. David, Glencore?
Yeah, it looks cheap. Yeah, it's still down 10% year to date against gains by other commodity companies, certainly the diversified. They're buying back shares, which is a positive. I mean, they think it's cheap. They're not the kind of people who I think would buy back shares unless they really felt it was below their so-called, their intrinsic value. So I think that is a positive show as well. They normally invest quite a lot. They spend quite a bit and expand quite a bit. But as Schalk says, when you look at the production numbers, and I'm not a miner, and these things always confuse me when I've got lots of schedules and numbers, but some up, some down. But I just think everything's favorable for the mining sector.
Yeah.
It's just starting to look better. So it's up to the businesses themselves, but it's a difficult industry. You're digging in the ground, which is always hard.
Well, it's staying with mining, because I take your point in that. AECI, the Bang Bang stock, or is it still a Bang Bang stock?
Okay.
And they're doing sort of they're doing a restructuring, which seems to have kind of worked. David, do we want the Bang Bangs? Because surely we've got to blow things up to do mining.
Yeah. It's one of these businesses. I was actually looking at the chart when the results come down, and it's one of these things that goes up, goes down, goes up, goes down, goes up. And at the end of the day, after 5 years, you're exactly where you started, and say, okay, that's a lot of hard work just to stay still. But you know what drags him down? The mining side's doing well, and always has. But again, it's the chemical side, chemical prices that's killing them. It killed Sasfin, it's killed Omnia, and now it's killing AECI. It's a very difficult industry. I think I don't know where their chemicals are. They always used to have a byproduct of the the Bang Bang side, the explosive side. They had a lot of chemicals around mining and a lot of chemicals around agriculture. But it's yes, they're restructuring a lot of continuing operations, but sales are kind of flat. Anyway, if we take a low this year, they're on a nice trend, but I still think you've got to look back to the 5-year trend to understand where they are.
David, I zoomed that chart out to 10 years, and it is up and down and sideways. Schalk, the Bang Bang, AECI?
Before we start that off, I'm nostalgically, you're talking about Bang Bang. I think there's a few, viewers out there that don't know what you're talking about, AECI and Bang Bangs. Now, this is actually, coming from the floor days. JC Floor closed on 1996. And then if somebody on the floor shouted Bang Bangs, they were looking for AECIs. And why? Because they actually create these explosives for the mines. So that's where the Bang Bangs came off. No, not a Bang Bang company. Not a Bang Bang time. And let's just cards on the table. I'm a shareholder. So I've been with this company. It's been a long-term investment, to say the least. Well, I think David mentioned the restructuring. They sold 2 businesses, so that definitely helped them reduce their debt close to half. I think it was 47 or 48% of the debt reduced. That was the major worry, I would say, last year. They're sitting with big debt worries. That's why they actually shut down their dividend as well, because they were a little bit worried about the debt levels. Now that's less of a problem. Yes, the chemical side struggled, as David mentioned, but it does seem like they're on the right track again. But very similar to the Glencore story. You mentioned that flat. I think there was no growth, or 2% growth in their revenue, and yet their EBITDA and also the earnings grown quite nicely. No, not due to some of these. Restructuring, but also they mentioned a lot of cost-cutting exercises. So, it seems like a bit of a trend lately for 2025. Companies that's doing well is the companies that have been cutting their costs.
Schalk, let's say with your question that just came in on the emails. Oceana, held since 2008, was good returns, been poor lately. Will you be holding on to Oceana? I got to say, I always like the idea of fish stocks, and then they just, I don't know, they're terrible investments. Schalk, would you be buying a fish company at this point?
I'm not holding Oceana, and I know very, very little, despite the fact that, as you mentioned, that the fish prices really went high. We'll be talking about the mining industry, being a tough industry. We need to go deeper into the ground, and it's getting more costly to take these commodities out, and fish is no different. We know it's a big struggle, and some of these companies has been struggling. Oceana no different. But besides the fact, I don't know a lot more about the company.
David, much more about Oceana?
They got caught in Louisiana like Cecil with was it Daybrook or something, or
Daybrook.
or yeah, a business there that was supposed to show a lot of promise but hasn't. I'm not quite sure what dragged it down, but this has been a big drag on them. And yet it's another business that provides very low cost protein, that should be doing well in an economy that struggles, that has a lot of poorer people, who would buy pilchards and so on. And yet I've always followed them just from a distance. I've never bought them and always interested in the business. But I think this Daybrook has really taken them back quite a lot. But take that away, it's not in a local operation, not bad. I haven't looked at a chart or where they are at the moment.
The chart is not pretty. The chart is not pretty.
No, okay. then I think blame Louisiana, blame America.
So then, David, a chart that is quite pretty, British American Tobacco. Question coming through, what does the panel think of British American Tobacco at all-time highs? I mean, this is a defensive stock, I suppose. I mean, it's been roaring this year.
It kills me that it's doing that, because I've always been against it from a pure principle point of view. Say, this is smoking, this is vaping, this is doing all ugly things. You shouldn't buy it, and yet I think there's huge value in the business. And the more I say that, the higher it goes. So it does annoy me that it is at an all-time high. But you've got to hand it to them. There are a lot of investors there who are doing pretty well out of it, simply because they're giving you the kind of returns. Yeah. And I wonder if Alan Gray and places like that still hold it, because the value in I just don't like smoking. No, Simon, sorry, but it's just one of those issues that I try and avoid. But
you can't avoid the stock.
Yeah.
Schalk, your thoughts? I mean, sterling yield, which is nice, is trading at highs. It is an industry which, if you'd asked me 5 years ago, I said it would be a horrid investment, but, well, it hasn't been.
Well, this is my only hope for AECI bang bangs. It's because if we sat here, had the conversation, I think about a year ago, I don't have the chart in front of me, but it's one of those charts that also went sideways, going nowhere and it was bad news upon bad news. It's fines, and it's, because if you're in that industry, like David mentioned, I mean, you're in a sin industry, so you're gonna be there's gonna be the good and the bad times, and they've had a few bad times. And then suddenly this company just hit the radar of these value investors. They started buying shares back. I mean, they're still buying back their own shares, which is always a great thing from any company. And as you mentioned, now the company is trading at new all-time highs. It is a difficult one, but as you mentioned, it's definitely a defensive stock, very similar to let's call it the Anheuser-Busch, those type of company, alcohol, your tobacco companies. Those are very, very, let's say, very much defensive in uncertain times. And we've seen it now again. Yeah, dividend yield, I think it's a dividend yield. It was in one stage, I think, close to a 10% dividend yield, now trading around about 6 or 7%. So it's a great dividend payer. But now if you're going to get into this company, you might need to take a long-term investment with this.
And we all forgetting the Reynolds deal, which I'd forgotten about, which they then obviously wrote down by gigantic amounts, but the market didn't seem to mind. Schalk, you mentioned Boxer earlier, trading update yesterday. Not a bad update. As you said, food inflation actually negative, which gives them great pricing power. Question coming through, looking good. Is there value at these levels?
Okay, so I mean, when you look at you mentioned 2 or 3 things. Let's take the viewer's question last. I would say that the food inflation was extremely interesting, and it just shows you that I think we need to relook at the inflation, the food inflation basket again, because the food inflation basket year on year was showing a 5% increase. Now I just went quickly when I saw the update coming out yesterday. And I saw this minus 0.6% food inflation. I went, this can't be. Now, there's a beautiful index, and I want to go encourage anyone to go look at it. It's Peter Maritzburg Household Index. It's done by a few housewives, where they go to, every month they go and take a basket, and they go to the same spaza shops, the same butcheries. I think it's about 36 of them, and they load in exactly the same produce. Tomatoes, very basic. Basic of basic. Tomatoes, bananas, I mean, your white bread, onions, those really basics. And I actually put that and those data public every month. And I actually went and looked. May last year, let's call it tomatoes cost you about 27 rand, just over 27 rand per kilo. And this May, it's now costing you 24 rand a kilo. And you can go down all these basics. And I realized, wait a minute, I mean, it will really be onions is cheaper, your white bread is cheaper. You can see where I'm going with this. This is a braaibroodjie story. The braaibrood is definitely costing you a hell of a lot cheaper now. So that's definitely been confirmed by the actual produce. So definitely those products, the prices are coming down. So if I'm going to go in that sector, to the viewer's question, I would most probably rather go for Shoprite. And just purely on valuations, there's been some great hype around Boxer. They had a fantastic IPO last year. They've done extremely well since then. I mean, over 12% growth in revenue for this, let's call it 17-week period. That's fantastic. Compare to the competitors' growth of 3.9%. So, but I think on valuation basis, I like Shoprite a little bit more and would maybe most probably lean towards that one.
Okay, and I found it, the Pietermaritzburg Economic Justice and Dignity, their household index. We learn something every day. David, aside from discovering around the Pietermaritzburg index, Boxer?
I like Boxer. I still think there's a lot of upside in it. It's momentum that's driving it. I don't think a lot of people have got enough shares, where they've got plenty of Shoprite. So you're going to find investors still building up their stake in Boxer. And, it's a good business. You know what's interesting, Simon, is that Boxer has a valuation of 30 billion. Mm-hmm. Pick n Pay still owns 2/3, which is 20 billion.
Yeah.
The market cap of Pick n Pay is 21 billion. It means that you're putting a 1 billion rand value on the Pick n Pay business, which is crazy. But I like the bottom end. Shoprite hasn't really done anything this year. It's been a negative company, which is in line with all the other retailers, but still a superb operation. But I think for the meantime, you're still going to find, it's like the We Buy Cars and Boxer, new companies there, still attracting investors. I think there's still upside there.
Man, Schalk, I am loving this index. But David, let's go to stock picks. David, you're going with Meta.
Yeah. Well, I don't like the man, but I like the business. And I think the fact that he's spending so much money stealing Apple's people, and he's just bent on being the leader in AI, I've got to give him credit. And listen, it's up 20% this year. I think the results are coming out this evening. Mm-hmm. I think he's going to be one of the winners and one of the leaders in AI. Simply, he's that kind of character. And he's got the right products to do it. So I haven't held them. I haven't had them in portfolios. But I think maybe it's time to look at Mr. Zuckerberg. Okay. He-Man, he's a Trump acolyte.
Yeah. He is a weird man, and he is throwing money. Reportedly, $100 million plus deals if you join his super intelligence unit. Schalk, you were mentioning Shoprite. If we are seeing price deflation in food, which they are certainly seeing in Pietermaritzburg and more widely, Shoprite's your pick for today because they're going to make hay in that world.
Yeah, definitely. I think and as David mentioned, they had not a great year this year, but I think this sort of creates an opportunity. The forward PE currently trading about, let's call it 17 times. If you look at the past 5 years, it's trading at an average PE of around about 19 times. So it's definitely not expensive, cheap, and doing the right thing, Simon. It's when you look around, you just keep on seeing these 60 scooters, and you can see that pet business are doing well. Everything is just a well-oiled machine, and it's always been a quality company. I always wanted to get into it, and at these levels, I do think it's looking attractive.
Yeah, and as I say, if we are seeing food inflation down to zero or negative, Shoprite is going to absolutely use that to their advantage. That's all for Stockwatch today. Thanks to our guests, David Shapiro, Sasfin Securities, going with Meta, Schalk, Louw, PSG Wealth, going with Shoprite. Up next, the close. Stay watching.